It's another earnings call recap episode, so strap in and get ready for a long one. This is Tesla Tidbits episode number 538 for July 25th, 2019. This show is sponsored by my supporter Richard. If you're in the market for a Model S, X, or 3, please consider using his referral code. Ask your salesperson to use code Richard174 or go direct to the web link at ts.la/Richard174 and pick up a 1,000-mile supercharging credit for your new vehicle. I'll start this show, as always, with the investor letter's salient points. It was very much a good news, bad news quarter. As I'm wont to do, we'll get the bad news out of the way first. And that bad news is that despite record deliveries of vehicles in this quarter, Tesla still posted a GAAP net loss of about $408 million on about $6.35 billion in revenue. As I posited on Twitter yesterday, this is disconcerting to me. Model 3 at this point is now 2 years old, and the kinks of production and logistics of high-volume overseas delivery should now be resolved. This isn't yet an existential crisis for the company thanks to the capital raise also completed last quarter, more on that in a moment, but it's nonetheless concerning for our favorite car manufacturer. With the gloom and doom out of the way, though, here are the positives of the quarter. Digging into the numbers portion of the investor letter, and let me be clear, I'm no expert at this, I think I found a couple of gems that you'll all appreciate. Firstly, no gem to mine here, Tesla's free cash flow for the quarter, which is figured by taking cash provided by operations and subtracting capital expenditures, was well in the positive at just shy of $614 million. Last quarter was a loss of about $920 million, and Q2 last year was a loss of roughly $740 million. So this is a great sign, as Tesla is showing a clear progression toward the positive side of financials. The other good news on the loss is that about 25% of that is attributable to one-time restructuring charges that will hopefully finally go away come Q3. As I'm perusing the numbers here, there are a few other interesting ones that stick out apart from the restructuring charges. The next is what Tesla pays in $172 million this quarter went to pay interest. Between this and the restructuring, that's nearly the whole of the loss. They sunk about $324 million into research and development and dropped another $250 million on capital expenditures, which per the letter included, quote, Gigafactory Shanghai, charging infrastructure, and early investments into the Model Y production line, end quote. That last bit is probably the most fun part of this, as we're seeing the first confirmed spending on Model Y. Lastly, on the financial awesome front, due in part to that cash flow positive quarter I mentioned, and mostly due to the capital raise I talked about, Tesla has about $5 billion in the bank despite the loss this quarter. So there's nothing really for the company to worry about existentially for a long time. If they do nothing different, which they will, and they kept losing $400 million per quarter, the company has enough cash on hand to run for 3 years at that rate. Alrighty, enough of my opinions, let's hear from the man with the plan. Elon began the call with the usual quarterly victory lap of what has been accomplished, but after that we got down to business with the new stuff. Elon first gives us the official statement of where Model Y will be produced and how far along they are with the program.
Here in Fremont, preparations for Model Y production have already begun. Since Model Y has high component overlap with Model 3, it should be, and we expect it to be, a lot easier to ramp. It's something on the order of 3/4 of all the parts are common between Model 3 and Model Y. And we expect manufacturing costs for Model Y, despite additional content, to be approximately the same as Model 3.
So that's some great and somewhat unexpected news there at the end. While we expected Model Y production costs to be similar to Model 3 due to the number of shared components, I don't think anyone expected them to be the same. I think that this is another great sign that Model Y production ramp will go so much smoother than Model 3, and I think we'll be getting far more vehicles out the door sooner in the ramp timeline than with Model 3. Next up, Elon had a few words on how things are going with improving service.
So we've been able to improve service considerably. And you can imagine that if we're doubling our fleet every year, managing service is quite difficult. It's like the total, because service scales as the, not just with new production, but as the total fleet scales, service needs to scale. And we want to scale service in a way that's sensible from a cost standpoint. But it's really quite a difficult challenge to scale. Nonetheless, We've made massive improvements in service, especially in parts waiting, time to wait for parts, and in collision repair. And we've insourced quite a great deal of the collision repair activities, which has had, I think, quite a good effect on customer happiness. And this will continue in the months to come.
Following this, Elon then went on to give some of his own comments on how he feels the financials are going. He too notes the strong cash flow, but at the same time walks back previous statements on profitability.
So a very important milestone, I think. We believe Tesla is now at the point of being self-funding, and we expect to be free cash flow positive in future quarters, with the possible temporary exceptions around the launch and ramp of a new product. From a profitability standpoint, we expect to be probably around break even this quarter and profitable next quarter.
The moderator of the call then prepared to begin the Q&A portion of the call, but Elon had the bombshell of the day chambered and interrupted for this announcement.
Thank you very much. Let's start taking some first questions. Sorry about that. Sorry, go ahead.
Yes, thank you. So important update is JB Straubel, co-founder and chief technology officer, will be transitioning to a senior advisor from the CTO role, and Drew Becklino will be taking over most of JB's responsibilities. I'd like to thank JB for his fundamental role in creating and building Tesla. Thank you, JB.
Thanks, Elon.
If we hadn't had lunch in 2003, Tesla wouldn't exist, basically.
It's been quite an adventurous 16 years.
Yeah. Lunch with you and Hal Rosen at Smith & McCormick and Schmick's in El Segundo. That's the reason Tesla exists.
I remember it well.
Yes.
And maybe just to add a bit more to that, I'm not disappearing, and I just want to make sure that people understand that this is not some lack of confidence in the company or the team or anything like that. I love the team and I love the company, and I always will. So Drew and I have worked closely together for many, many years, and I have total confidence in Drew, and I'm not going anywhere. If there's anything I need to do to be helpful to Drew or the whole team or any of the ongoing projects. So I'm actually really happy with how we've kind of phased and transitioned some of these different projects and people in, and I feel like this is a super good process overall. Drew, you want to say anything?
I'll just say, obviously, big shoes to fill, JB, but we have been working closely. In fact, we were even talking about this project back in 2003 all along. And
but you guys talked about it in 2003 as well?
Yes.
Wow.
Yeah.
2003 is a big year.
I was graduating and I didn't know what to do, so
okay.
I was like, oh, we should do this project. No, I feel exactly as you feel that that we are well set up, that we know how to get help where we need to from you, and that we're very excited about the growth ahead of us, myself and the whole team. So.
Yeah.
And I'm excited to stay involved in some of our core technologies and follow that and help where I can, just in less of an operational, obviously not an executive type role.
Sounds good. Well, JB, thanks again for your instrumental role in creating this company, and Drew as well. So that's cool that you guys are talking about it in 2003. Yeah. That was like the right year.
Good year.
A good year.
It was the technology was ready. It was the time.
Yeah, lithium-ion was like finally ready. Just needed to be put in a car. AC propulsion. Al Capone, Tom Gage. T0. You gotta give those guys a lot of credit.
Wow. Well, while JB has said he's still going to be around, we all kind of know where this is headed, and that's the end of an era at Tesla. It's definitely heartening to hear that his successor has been around and even talked with JB from the very beginning. It was also neat to hear the respect and kudos given to the other pioneers in the space at the very end of that clip. With that, questions began, and the first retail question was an interesting one, asking why Tesla is reducing the price of Model 3 even though they're supply constrained. I didn't include the audio here as Elon gave a very meandering answer that didn't really get straight to the point, but the answer was essentially due to the reduction of the US tax credit at the end of Q2. The price reduction of Model 3 was only $1,000, but the cars actually got $1,875 more expensive with the loss of that tax credit. So overall, the car is still actually $875 more expensive, taking this into account, and apparently the company felt this may negatively impact them. So having the ability to do so, they made the price reduction. The next retail question asked when we could expect that battery investor day we were promised, and what we could expect from it, and Elon gave us the goods.
Yeah, I think for our battery day, we're going to do a comprehensive review of cell chemistry, module and pack architecture, and a manufacturing plan that it has a clear roadmap to a terawatt hour per year. Now, the timing for this probably is about 6 months, like maybe February or March next year.
The next retail question addressed something that came up recently, in that Tesla was very much cell constrained to take on any further projects, and how Gigafactory 1 was progressing in addressing that issue.
We have seen improvements in the 23 gigawatt hour number. We're in the high 20s now, with the trajectory continuing upward. We're not
about 28-ish.
Yeah, 28-ish. Yep. I would say we're not cell constrained for any of our activities at the moment.
Cell volume is approximately matching the production ramp rate.
Yes.
Yeah.
One of the more interesting answers of the day came as Elon answered the question of whether Model S and X sales were being cannibalized due to Model 3's smashing success. The answer from Elon may surprise you here.
Actually, we were just talking about this earlier today. We're not quite sure ourselves. I think that there's some cannibalization. I think maybe a false expectation in the market that there's like some big overhaul coming for S and X, which then causes people to hesitate to buy if they think there's like some radical redesign coming, which is why I emphasize publicly that this is not the case. The Model S and X today are radically better than the ones that when we first started production, especially S. Like say like 2013 or 2012 Model S compared to today's Model S, night and day. In fact, I still run into people I know who have like 2013 Model S, and they think it hasn't changed. I'm like, it is dramatically better in every way. But we don't do model years. We just roll in improvements as they come. So, but I think there is maybe a communications issue where people don't realize just how much better the S and X are today than when we first started. And we obviously want to address that communications issue, and just get a better understanding, from the front lines, like what demand should be higher for S and X than it is, and we'll get to the bottom of it and fix it.
Finally, we got a sneak peek at just how important batteries are to the business, as Elon hints that maybe a new master plan is in order when he talks about a massive increase in battery production.
Yeah, I think like we probably need to like just do like a reset, like I don't want to say a master plan part 3, but it's sort of like yes, maybe to some degree like battery day will be kind of like a master plan part 3, which is like, okay, how do we get from kind of in the tens of gigawatt hours per year to multiple terawatt hours per year. That's a pretty giant scale increase. And so that's like increased by sort of roughly 100. Like, if we're like at 28 gigawatt hours right now. Well, actually, yeah, there's more than that when you count the factories in Japan. So like a little over 30, 35 or something like that. Then how do we get to like 2 terawatt hours a year? Which is like, so 2 order of magnitude increase.
That's the way you have to think about it, because that's what we need to do.
Yeah, exactly. In order to really make a fundamental shift in the world's energy usage and really transform things to a sustainable energy future, if you're not in the terawatt hour range, it's a nice news story, but it's not fundamentally changing the energy equation.
Terawatt hours per year? Let's see it, boys. I can't wait to see the logistics behind that one. That is it for today's show. As always, I hope you enjoyed the extra touches I give the earnings calls as much as I enjoy producing them. Thanks to all my patrons supporting the show at the $10 plus level at patreon.com/Tesla Tidbits. And as always, a special shout out to all the super patrons supporting the show at the $10 plus level. They are Drew Schuyler, John Waller, Ryan Scarborough, Lee Sweet, William Henry III, Dorian Steve Guberman, Bruno Kundichi, Joey Boots, Ralph and Cheryl Waterhouse, Adam Raymer Brown, Megawatt Photovoltaic Development, Todd Sullivan, Mitch Long, Zortec LED Canada, Morven Ogg, Blake Thompson, Raymond and Deborah Malkowitz, T Sportline, Michael Pastroni, Travis and Cheyenne Rush, Chris Hovis, Craig Murphy, Vicky Kirk, Ricky Johnston, Bien Concepcion, Nathan Garza, Paul Gona, and Ed Patterman. If you have feedback for me, the best way to be heard is to tweet at Tesla Tidbits and use the hashtag AskTeslaTidbits if you'd like your question to be considered for the show. I'll see everyone back here again next week. Until then, keep it charged and hit the road.